To today's teachings. Um, in today's topic, we are going to be talking about swing points and fair value gaps, including other blocks. Okay, I haven't really talk much on other blocks theory. That's because the concept on of the ICT mentorship this year was mostly around fair value gaps. Okay, so that's just why. But the concept of fair value gaps are not without other blocks. There's always an other block close by to the fair value gap. Okay, so we're just going to talk about the concept today. Before we get started, please, if this is your first time of coming across this channel, please do well to subscribe. Okay, please subscribe to this channel, turn on the notification bell, and uh, so that you be updated once we upload new content. Okay, and this week videos came out late. It was supposed to be done on weekend, but I had a very busy schedule, so I apologize guys, but I'm gonna try and put more effort on it. But I just want you guys to encourage me in return for this, for my efforts on these tutorials, by just subscribing. Okay, please subscribe if you have not done so, and God bless you as you do that, please. Okay, so let's get down to today's teaching. Okay, so as we all know, we always start our analysis from the weekly time frame. Okay, start our analysis from the weekly time frame, and as you can see here, this is the weekly time frame on Australia USD. Okay, so we talked about, actually I talked about the fair value gap here, and we can see it has already happened for some time now, about last 2 weeks. Okay, or thereabout. And right now this is the current price action. Okay, this is the current price action. The market is actually open today, being on Tuesday. Okay, so now we are going to talk about uh swing points and fair value gaps, including other blocks. Okay, so as you can see, price has already reached for uh, a premium array, which is a fair value gap. Okay, so we are expecting a kind of retracement back down to a discount sector of this whole range. Okay, in other words, the longs that we accumulated here has already been distributed. Okay, so we are looking, smart money are going to be looking to buy back more long positions, more long entries in a discount market. Okay, so we have already reached for a premium, and like I said, in my last video, I told us that price is actually going to be reaching for some discounts. Okay, so let's see how that goes. Okay, so as you can see, looking at this long week, this is a kind of manipulation. Okay, so I rather prefer to use the body of the candle. Okay, so I rather prefer to use the body of the candle, and as you can see, we are above equilibrium, which is obviously in the premium sector. Okay, price reacted from this weekly fair value gap, and so we are likely to reach for for some discount. Okay, we are likely to trade into the discount aspect of this whole price action range. Okay, so this is more like a retracement. Okay, this is more like a retracement on the weekly time frame. Okay, though price is bullish, but we are currently retracing. Okay, reaching for the discounts array. Okay, we are reaching for for discount prices. Okay, so uh now this is the daily time frame. Okay, this is the daily time frame, and as you can see, in our last video we talked about this consolidation, the manipulation and distribution. Okay, so now this is that weekly fair value gap, a weekly equilibrium, sorry. And as you can see right here, we are in the premium sector. Okay, and I also talked about this fair value gap. Okay, I talked about this fair value gap in terms of the daily range from this low to this high. This is also below uh, the equilibrium. Okay, this is we are already in the discount sector of this range in terms of looking at it from the daily time frame. Okay, so remember, you have to give yourself you have to be flexible at when reading price action. Okay, you have to be flexible, you have to give yourself possibilities of what and what could what and what not to expect. Okay, so you should be expectant of some things, and have some rules on your behind every trade. Okay, so currently we're having a bullish week and a bearish daily bias. Okay, and obviously there is going to be a kind of sink in the marketplace. Okay, you see that one is going to correct, you see that the weekly is going to correct and get in sync with the daily time frame, or the daily time frame is going to correct itself and get in sync with the weekly time frame. In other words, we having a bullish week and a bearish daily uh, uh, the, 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 the daily time frame being bearish and the weekly time frame being bullish. Okay, uh, that's a kind of a crack in, is it movement, or am I going to put it in trend. Okay, so one of the two time frames has to correct itself. Okay, so let's just see. For the now, we are having a bearish daily time frame. Okay, so this is what we are looking at, and as well, so you can see from the weekly time frame we are retracing. Okay, so that is why we have the bearish daily time frame. Okay, so I'm expecting this of fair value gap, which we have already traded into. Price can react from here and resume and get in sync with the uh, daily time frame, sorry, with the weekly time frame, or it can reach below the weekly range equilibrium. Okay, into the premium discount sector of it, and can reach for this old low. Okay, can reach for this old low. Okay, remember we always remember, price always reach from some sort of premium. Price moves from some level of premium to discount. Okay, so if we are already trading off a premium sector, a premium market, as we can see here, we should probably reach for uh, the discount side of it. Okay, should probably reach for this kind side of it. So I'm still expecting some more bearishness below the weekly equilibrium. Okay, and this is a fair value gap, right? And this is an old low. Okay, so I'm still expecting some more bearishness. So I'm sticking with the bias. My bias is still bearish on the Aussie dollar. Okay, my bias is still bearish on the Aussie dollar. Okay, I'm sure. So we are going to talk about swing points. Okay, this lesson we're going to talk about swing points. So swing points are like what I said in our last previous video. They are like the turning point of the market. Okay, the change in trends, or how am I going to put it, the change of trends. Okay, from uh, one trend to another, the change in the movement of trend, from being bearish, for example, for the change of a bearish trend to a bullish trend. Okay, the formations it forms. Okay, the formations it creates during the turning point of that particular trend is known as the swing points. Okay, so they are like the formation created during the turning points of every trend. That's the swing point. Okay, so we have two types of swing points. Okay, uh, we have the one on stop hunts. Okay, we have the one on stop hunts. So in this example, we have a high created, we have a higher high, sorry, we have a high, we have a low. Okay, then we have a higher high that takes out the liquidity resting above this old high, and breaks down. Okay, and breaks down. Okay, not is bullish. Okay, we are having price rallying up, rallying up. Then when price is about turning around, okay, it's going to create this formation. It's going to create this formation. It's going to create a high, create a low. Then it's going to create a higher high. Then shift, and there's going to be a kind of a shift in structure to the lower side. Okay, so what happens here is that those the buyers that have their buy stop right here, okay, the buyers that have their buy stops resting above this old high, they are going to get tapped in. Okay, their order is going to get tapped in, and you know, price taking the other direction is going to result in losses. So those that have their buy stops here, we have their stop loss here obviously. Okay, and as price breaks upwards, it's going to tap them in, it's going to tap the traders in, and when it breaks down, it's going to suck these orders that were resting above here underwater. Okay, it's going to take them out right here, and those that sold this short-term rally, okay, that sold this short-term retracement, uh, that saw maybe a possible kind of pattern, like maybe an old high resting somewhere on the left side, and they thought this was kind of resistance, that sold this as a short-term resistance. They are going to have their stop loss above here, and as price broke through this previous old high, uh, is going to take them out. Okay, it's going to take them out. So this run right here is taking those that sold this stop, that sold this resistance, this short-term retracement, is going to take them out, and as well at the same time pull in those that have their buy stops above here, then it's going to take them in the wrong direction. Okay, so the scenario right here is that the market makers are going to run price up. Okay, they are going to run price upwards, tapping in the buy stop resting above here, and going to take it the other direction. Okay, so they are going to sell to the buyers that are resting above here in order to go short. So they are going to pair their orders with the buyers here. They're going to sell to them in order to go short. So okay, so our possible entry, where we look for our entry, is when price retrace back into this range. Okay, this range high to this range low. Okay, when price retrace back into this range, this is where we hunt for our fair value gaps and our other blocks. Okay, so remember the underlying trend for this first formation is bullish. Okay, so we have a bullish scenario here. Okay, so now for the second kind of formation we are going to see is known as the failure swing. Okay, in this example, in this case, the trend is still bullish. Okay, we're having a bullish trend, price is rallying upwards. Then once we see this pattern create, this formation, uh is a price action, or am I going to put it, once we see price creating this formation, okay, so the failure swing is something like we have an high, we have a higher low. Okay, because this low is probably is lower than this, is higher than this, we have a higher low. Then we are going to have a failure swing. Price is going to fail to go above the previous old high, and it's going to shift in structure, it's going to break down to the lower side. Okay, in other words, those that bought this as their those that bought this as a kind of short-term support going up is going to is going to take them out. Okay, so what happened here is the market makers selling this on weakness. Okay, this was actually, they sold this market on weakness. They bought it right here, and as price was rallying upwards, they took out their order, and price went the other direction, and they are going to get in. So our anticipated entry is going to be when price retraced back into this range. Okay, this is where we hunt. Inside this range is where we hunt for our order blocks, our fair value gap, and any of the smart money concepts tools that you use on your entry. Okay, So now this is on strength. Okay, this is on strength. This is market maker selling on strength. Okay, this is market maker selling on strength, and this is market maker selling on weakness. Okay, they are selling this on weakness. They are taking off their mark, they are taking out their money from this market and causing it to fail to rally above the previous old high. Okay, in other words, they took out their their long positions. Okay, they took out their long positions from the market, and as it break down, okay, and causing the market to break down. Okay, so remember the underlying trend is bullish. So once uh we see this kind of formation, we should anticipate that the trend is about to change. There's about to be a change in trend. Okay, there's about to be a change in trend, and these are some of the factors we combined with our bias and the rest. Okay, so now for the bearish aspect of it, okay, we have the underlying trend should be bearish. Okay, the underlying trend should be bearish. So we have a market that is declining, uh, going downwards. Then we have a low created, we have a lower high, then lower low, and a higher high. Okay, so in this example, in this case, we have those that bought here. Okay, and we have those that have their sell stops resting below this old low. So as price broke down, okay, breaks this short-term support level, those that have their sell stop resting below here were tapped in. Then those that bought this short-term rally up, they have their stop loss were taken out. Okay, so smart money paired the orders, so they actually bought from the sellers that were resting above here to go up. Okay, so in other words, smart money bought this market on strength. Okay, they bought this market on strength. Okay, and our entry will be on the retracement inside this range. Okay, retracement on this range. Okay, so the other one is same thing here, failure swing. Okay, so we have an underlying trend that is bearish, and smart money offloading their short positions. Okay, causing the market to, you know, causing a failure swing. Market was unable to create a lower low, instead it created a higher low, and shifted in structure upwards. So our entry will be on in between this range low to this range high. Okay, so this is where uh we look to go long, this is where we look to go long, and this is where we look to go short. Okay, this is where we look to go short. Okay, so now let's see how this looks like in the real chart. Okay, so we have an underlying market that was bearish. Okay, remember, for this to be effective, you have to put under consolidation into place. You have to know your bias. Okay, you have to know your bias, and you have to know your bias, which is very important. You have to know the direction and the market is going. Okay, you have to know your directional bias. Okay, so now in this example, as you can see, the market turned around here. Okay, we have an underlying market that was bullish right here. Price created this high. Okay, this is a swing high, right? Then price came down, created this low. This is a swing low, right? Then created the higher high. Okay, so those that sold this as, that sold this as a kind of resistance, or that had their buy stops above here, tapped in when price breaks up. Okay, when price broke structure upwards. Okay, so we have price create a higher low. Okay, because it's obviously higher than this low. Okay, and breaks upwards, then breaks down, shifted in structure bearishly. Okay, so those that have their buy stops resting above here were tapped in. Okay, and those that sold these were, taken out. So smart money paired their orders with the liquidity that was resting above here, and took price the other direction. They took price the other direction. Now this is smart money took price the other direction, as you can see here. Okay, so now that is for a bearish swing point. Okay, that's when the market is turning around to go lower. Okay, in this case, okay, so as you can see here, price created this high, created this low, created the higher high, and broke, shifted in structure to the lower side. Okay, so now in this example we have price, we have a swing low right here. Okay, we have a swing low right here, we have a candle that is high, low, and the higher high to the middle. Okay, and price traded below this swing low right here, right, then shifted upwards. Okay, so we have those that bought this as a short, uh as a kind of support level. Okay, we have their stop loss below here. As price went down, grabbed liquidity, paid their orders. uh Smart money actually paid their, took the other side of their orders. Okay, those they have their sell stops right here. Smart money bought those sell stops to go higher. So smart money of they bought this, they bought the paid their orders with the sell stop resting below here, and they bought it higher and they sent price higher. Okay, so now we are going to be looking at the other concept, which is the failure swing. Okay, we actually have it, we have the formation here, the two formation formed here right now. Okay, as you can see, we have a swing low, we have a swing high, we have a swing low, a lower low, right, taking out what, taking out the sell stops, activating the sell stops that they are below here, and the those that went long right here, that bought this short term rally, took out their stop loss, penned, then paired their orders with the sell stops that were resting below here, was activated. Then we created another high, we created another higher high. Okay, we created another higher high, creating a failure swing, right. Then we shifted, price shifted in structure to the upside. This is where we got our entry in on, this is what I was talking about, the swing high to this, the swing low to this swing high, here we hunt for our entries, right. Okay, so now as you can see, it's being clear, it's very clear right here, right. So we have the swing low, we have sell stops resting below this old low, right, and price traded through. Okay, grabs the, activating the sell stops, those that were selling short here. Smart money bought this, the from the sellers that were resting below here. Okay, then created a failure swing. Okay, we have the high, and we have a higher low instead of a lower low, right, creating the failure swing, and price shifted in structure. Then we look for our entry on between this trading range low and this trading range high, right. Okay, so as you can see, that is what we have here. Okay, we have that here, though I'm not going into much details, but I just want us to understand the concept of swing points. Okay, now how do we have to apply this on the live chart? How do I apply this to trading? So I have I don't know, on the 12th of April price action right here. Okay, so my bias is definitely bearish, in the sense that price has already reached for that weekly fair value gap, right. So I'm expecting lower prices, I'm expecting lower prices. So we have the opening price right here. Okay, 12 a.m. midnight opening price. Then we have price created this pattern, we have price create, price was the underlying uh the underlying trend was bullish, right. Then I saw we have price creating a high, creating a higher low, creating a higher high, and breaks down. Okay, and breaks down, although, and breaks down. Okay, so so this is the classic swing point. Okay, this is a classic swing point on stomp hunt. Okay, so price took at this old high, and we remember our bias was the bias is bearish. Okay, so let's go down to the lower time frame and see and anticipate our entry. Okay, so this is that old high right here. So price traded through, came down, traded above this old high, but there was no shift in structure. Price created that same pattern again on the lower time frame. Okay, remember, price is fractal, right? So whatever pattern we see on the higher time frame, we'll definitely see the same on the lower time frame. So price created this high, this low, created the higher high, taking out this uh the buy side liquidity that was resting above here. Those that have their buy stops resting above here, the other were paired with smart money. Then price shifted the structure. Okay, so this was first entry, this was my first entry right here. Okay, this was my first entry right here. So as you can see, price tapped me in right there. Okay, so now what, talking about the swing point. Okay, this, waiting for this is a very huge, waiting for all this to, to occur on the 15-minute time frame is a lot of time. Okay, so what I actually did was, once price traded through this old high, okay, you have to go down to your lower time frame and look for that same pattern to occur on the lower time frame. Okay, so when price took this old high, okay, what I did was, or what you have to do, once you see price takes out an old high, okay, once price takes out an old high or an old low, depending on your bias. Okay, in this case we have a bearish bias. Okay, so price has just traded above our old high in our New York key zone. Okay, in our New York key zone. Okay, so once you have to do, you have to go down to your lower time frame. So this is that old high, so price traded above it, came down, then went up, but the pattern was not created here, right? The pattern was not created here. The pattern was only created right here. Okay, and as you can see, so this was what motivated, or this was what gave me my first entry rather. So price created an high, created a higher low, created a higher high, and broke down. Okay, shifted in structure. Then what do you remember what we do? Between this trading range high and this trading range low, you look for your fair value gaps. Okay, you look for your fair value gaps. And okay, so this is my fair value gap right here, and you can see I got my first entry right there. But as you can see, price just kept on going higher and stopped me out. Okay, so remember, if you get stopped out, you don't change your narrative because you got stopped out. Okay, you don't change your narrative, you stick with your bias. Remember, we are still in the New York key zone. Okay, so and I got my second entry right here. Okay, so this was break of structure. Okay, this was a break of structure. We have price creating a high, we have a higher low, but then we have a failure swing. Okay, look at this, this is a failure swing, right? We have this old high, this high failing to go above the previous old high. So this is a classic failure swing, and price broke down. But look, take a close look at this. There was no fair value gap created, right? So there was no entry right here. Then we wait to see what price has for us again. Price trades up, as you can see, trades slightly above this old high. So this, it was like price creating a high, a low, a higher high. Okay, so we'll wait for our shift in structure, right? So this is our shift in structure. Okay, this is our shift in structure right here. So price, this high was a bit is a bit higher than this high by a few pips. Okay, so price just went above it, and and a huge displacement right here, so shifted in market structure. Then we look between this trading range high and the trading range low for our fair value gap. So this is our fair value gap, right? So this is where I got my second entry. Stop loss was above this old high, right? So our price broke structure. Okay, price broke structure to the lower side, and thus look at this swing, right? So this is a high, this is an old high, this is a low. We have an high refusing to go above the previous, failing to go above the previous high, and broke structure downwards. creating a fair value gap, right? So this was if you had missed this first entry, this would have been your second entry. Okay, this would have been your second entry right here. Okay, so now the concept of order blocks. I know I've not really been talking about order blocks. So I'm going to talk about order blocks right now and how to filter out uh how to know the right order blocks to use, and filter for the right order blocks rather. Okay, so order block is simply the change in the state of delivery, right? So what makes an order blocks to be a valid one is you have to put into consideration the following factors. Okay, one, uh other blocks actually, they are more valid when you attach it to the swing points. Okay, when you attach it to the swing points, it can be a failure swing or uh, uh, a run on liquidity swing. Okay, run on liquidity swing. Okay, so in this example we have other blocks, although I didn't identify or I didn't talk about it here, it doesn't mean it's not there. Okay, the fact that I don't talk about it doesn't mean there are no other blocks attached to our imbalance. Okay, so uh the concept of knowing a strong order blocks. Okay, so we have the swing point right here, we have the high, the low, the higher high, and our shift in structure. Okay, then what makes this other block, this right here, this is an other blocks, this is an other block. Okay, this was the last up candle before the down move. Okay, so what made this other block to be valid is the fact that we have we have a run on buy side liquidity, price shifted to downside. Okay, and we have an imbalance close to it. Okay, so this is the fact, this is what made this order block to be valid and a strong order block. Okay, because we have already run out liquidity and price has already shifted in structure, and we have an imbalance close to it. Okay, so this is what make another block to be valid. Then we also have another order blocks here, right here. Okay, these two consecutive candle is our order block, and as you can see, the pattern created here was the high, the low, the failure swing, and breaks down. Okay, and you can see there's also an imbalance right here. Okay, there's also an imbalance right here, right at the other block. Okay, so what makes the other blocks to be valid is the fact, one, we have to have a run on liquidity. Okay, we have to have a run on liquidity. Okay, then we have to have it can be a run on liquidity or a failure swing. Then there have to be a form of imbalance close to the other block. Okay, there have to be a form of imbalance. As you can see here, we have this imbalance right here. Okay, and we have our other block right there. We have this imbalance and we have our other block. Okay, so these are one of the factors that makes a valid other block. Okay, so one of the that makes a valid other block. Okay, so now the takeaway from this lesson on what I wanted to explain to us actually is that when we talk about the swing points, um, if having our higher time frame narrative. Okay, so for example, let's say this is a 15-minute this is a 15-minute fair value gap. Okay, and I'm anticipating that once price reach for this fair value gap, it should drop down. Okay, in other words, if I'm anticipating that this is a higher time frame fair value gap and I'm expecting price to you know react off this fair value gap, I'm going into price into I'm looking at the price action, expecting once price reach for this fair value gap, I'm expecting to see one of these two pattern created. Okay, I'm expecting to see one of these two formations created. Okay, once price trades into this fair value gap, I'm expecting to see either a failure swing. Okay, price shifts lower, or or a run on liquidity for the trend, for the underlying trend to turn around. Okay, in other words, if this was a fair value gap above price and the underlying narrative is bullish, as you can see here, once price trades into the fair value gap, from my lower time frame, I want to see this one of these two formation, right? I want to see either a failure swing or a run on liquidity to indicate that this current um, trend, okay, this underlying trend that got price here, okay, this underlying trend has changed, okay, and it's now moving in my supposed direction, okay. In other words, I'm not just going to, because price have reached for this higher time frame fair value gap, I don't just go there and sell. I'm not just going to place a sell order because price has reached for this fair value gap. No, I don't do that, okay. I don't advise you to do that. What you want to do, once price trades into the fair value gap, okay, that you are anticipating, once price reached for it, you go down to your lower time frame and look for one of these two patterns to be created, okay, either a failure swing or a run on liquidity, okay. In other words, so same thing goes for uh if I'm anticipating some higher price from this fair value gap. It can be an order block, it can be an old low, it can be a rejection block, it can be an old high, okay. Once price reach for this kind of support level, okay, what I want to say, I want to see one of these two pattern created, okay, inside of the fair value gap, okay, inside of the fair value gap. It can trade beyond the fair value gap a bit, it can trade above the fair value gap a bit, okay. But how do I know that the current narrative, that the underlying trend has changed and is about to go in my in my proposed direction, okay? This is one of the things I look for, okay? This is one of the things I expect to see in price action, okay? So once price reach for that particular, it can be fair value gap, it can be a mitigation block, it can be an order block, but once price reach for that, for your anticipated level, okay, you should expect to see this one of these two pattern created to that will inform you. In that way, you will understand that, or you will know that the underlying trend has changed to your proposed trend, okay. So I hope I've been able to explain the concept of swing points and other blocks, okay. So thank you, and if you have enjoyed this video, please do well to subscribe to this channel. Check out my previous video. If this is your first time, please start from the first episode, okay. So see you guys in the next video and have a good trading week.